Alrighty. We're going to get this space started in just a second. You guys are welcome on stage if I know you. We're going to do an open panel later tonight, so everyone will be let up. But right now, if I know you, you can come on up. Weekly update, episode 6. What a day. What an absolute day that we had today. A whale decided to sell over $100,000 worth in under an hour. And we absorbed that. Not only did we absorb that, but we closed green. We closed very green. We closed like 2 mil market cap higher than where we opened. And if you look in that chart, like every time that I see a big wick like that to the downside, you know what that means? That means the bottom is in. All right. I want everyone to like and retweet the room. I want everyone to make sure that all the other stonklers are in here. If you know someone who holds stonks that isn't in the call yet, make sure to forward the space to them. And yeah, let's get moving. Let's see if we can get Saucy in here too. Everyone go in the purple pill in the bottom right, ping Saucy. Everybody at Saucy. And man, also another project that we are very fond of might have bought $20,000 into stonks out of its treasury today as well. So that's cool. We'll talk about that later. I think there should be a post coming out either today or tomorrow announcing that we took a little bit of inspiration from Wolf on that front. Not quite as much size as Wolf did with Andy and Pepe. We're not balling like them yet, but I'm sure we will be eventually. So like and retweet the room. We'll get this started in just a second. We're doing this thing where we do a brief market update, then we do a stonks chart update, and then we do a segment with a couple other people on stage where we talk about tips, tricks, advice, things that people want to know. Last week we talked about general trading tips, like rules that I have for myself to keep myself profitable and to stay a strong trader despite market conditions. This week, I think we're probably going to be talking about how to buy and sell respectfully and get the most out of your buys and the most out of your sells. Because like the whale today who clipped out over $100,000, he got screwed over by price impact. He probably lost 20 to 30%, but he very easily could have gotten 95% plus of that. We'll talk about that because it's very important when you have these conviction plays, when you have plays that you're tied to and you want to be positive towards these projects. There's many ways to take profits and sell that don't impact the charts. And that's something that I see a lot of value in. And it's just best for everyone. If you don't impact the charts, then you don't get screwed over by slippage and price impact. So it's better for you too. It's better for you, better for the project, better for everyone. But yeah, I think we're about ready to start this. I want to see a couple more pings on Saucy. I see 4. Let's get 10 pings on Saucy. Everybody go to the purple pill and just at Saucy. Everybody at Saucy. And at Saucy as well in the Stonks group chat. Everybody ping Saucy. Hang on, I'm going to do that right now. Also, this guy, Saucy, I can't believe him. He made an entirely new Stonks group chat because he banned himself from the old one because he owned the old chat and he banned himself from it on accident trying to remove Fitty from the chat. And then he goes and he makes a whole new Stonks chat. We migrate the entire community to a new Twitter group chat. And this guy, Saucy, still adds Fitty. The reason that he got banned from the old chat because he was trying to remove someone, he added them to the new one too. I don't. Geez, Saucy. That's the most saucy thing I've ever heard in my life. Oh my goodness. But let's get this started. Hang on, let me pull up TradingView. Wow, that's beautiful. I just opened up the Stonks group chat and everyone's adding Saucy. It's fantastic. Alrighty, I'm pulling up TradingView. Let's get the Bitcoin chart up here. We'll go with the Coinbase chart. Yeah, we made new highs today. $94,000 Bitcoin. Oh man. Jeez. Okay, Bitcoin. We've got, actually, let me pull up ETH BTC too, because I'm pretty sure ETH is really struggling. I'll pull up Ethereum. Yeah, ETH is struggling, but it doesn't look bad. It's just okay. Okay, so when I look at Bitcoin, it's just a slow grind upwards, right? It looks like vertical accumulation. If it starts distributing, if we see a daily candle below 90K, I'm going to be a little bit concerned for the short term, but that'd be fine. Like, I really wouldn't be surprised or upset if we had some kind of dip on Bitcoin where we went all the way down to like 81K. I think that would be very beneficial. Wipe out a lot of the leverage traders and clear the board so that we can really have a really huge move up, right? A move to 120, 115, 120 in just a couple days, right? And that would kick off altcoin mania. Like, that's what I would want to see, but I really would not be surprised if we saw like a flash dump before then. But in the case that happens, I don't think altcoins would nuke. I think they might, retrace as much as Bitcoin, but I wouldn't say more than that. But I will say that Ethereum kind of lines up with my assumption for Bitcoin, right? If we have a nuke, like a little baby nuke, right? Not a big deal. Just a tiny little nuke from down to like 81K and then a really quick bounce out of it. Um, like Ethereum's lining up with that. If you go onto the Ethereum low time frame for the past 1, 2, 3, 4, 5, and now today's the 6th day, we've been making a bear flag. And so with that, that would suggest a move down to 2,800 ish, in which case, obviously, we would V recover out of it. That's where I lean. But also at the same time, like when Bitcoin's in a bull market, sometimes it just ignores structure, like it did with the CME gap down around 70, like the mid 70,000s for Bitcoin. We've got a CME gap down there that we haven't filled, and it just doesn't matter. That so sometimes Bitcoin in a bull run, it just completely ignores what it should do, and it just goes up anyways. And we might see that happen here, just like we did 2 weeks ago or so when we had that big CME gap. So I say that to say where I lean is that we have a small retracement on Bitcoin and ETH. Just because I lean in that direction, it doesn't mean that it's really bound to happen. We could just go up, right? Like I said, Bitcoin, it looks like vertical accumulation right now. It's not distributing yet. So we won't know until it does start distributing. And by distributing, it's making like lower lows, right? So if it dropped down below 90K and closed down below 90K, then I would say it's probably distributing, in which case a retracement would be likely. But again, we really don't need for it to happen. It's a bull market. And I think everyone's surprised about how high we're going to go. I think at a bare minimum, we're going to hit 170K this cycle. I'd be surprised if we hit below that. And I would be willing to bet like a very large amount of money that we hit at least 170K. That's my base case. In order to do 170K in a year, we need to really start moving because we just don't have that much time to waste after that massive range that we were in since March. My base case, I think we retrace to maybe like 81K. And if we do happen to retrace down there, then that's a shove everything moment. That's like the last chance you get before altcoin season, in my opinion. And if we don't get that, then fantastic. Like I don't necessarily need another buying opportunity on my large caps, right? I've got my bags packed on Bobo and on Wolf and on Andy and Hoppy and a couple others. Those are my main mid caps that I've got. I just finished topping off my Brainlet bag. I got to where I'm happy with that today. So I don't really need another dip. I'm already positioned. I would be fine if we start altcoin season now. So I'm happy either way, right? Either we buy more of the stuff we like or we just see the stuff we like go up in value. So it's a win. It's a bull market, right? There's no reason to be afraid. The time to be afraid was like, I don't know, in July, right? When it was too early to call it a bull flag, but it was also like it looked like we broke structure. So like July is the time to be afraid. I don't really see a reason to be afraid now. We're looking good. Let me look up ETH BTC. I wonder how that looks. Hang on. ETH BTC. We made new lows on ETH BTC today. Who's surprised? Who's surprised? We nuked from 0.035 all the way down to 0.033. Dang. It's a rough day for ETH BTC. We had such a big bounce. It looked so promising. And we just, ETH BTC just dropped off a rock after that. Jeez. This is not a good chart. The only guarantee that we have in crypto is that everything goes to zero against Bitcoin, right? That's the only guarantee that we have. We shouldn't be surprised when Ethereum underperforms, especially when it's so big compared to stuff like Solana. Like, it's not hard for Solana to outperform Bitcoin when it's relatively small compared to Ethereum, right? So we shouldn't be surprised when we see Ethereum underperform. Also, like if you look at the ETH chart, hang on, let me pull back up ETH because I overwrote the ETH chart with the ETH BTC chart. So if you compare ETH to Bitcoin, like you can put them on the same panel as each other. You don't really need to, but if you compare the day that Bitcoin last cycle made a new all-time high, right? Let's look at that. It was on November 17th, right? Now you look at the day that Ethereum made a new all-time high last cycle, and that was January 21st. Right? So it took 2 months for Bitcoin to make an all-time high last cycle, and then Ethereum finally made an all-time high. Let's see how high Bitcoin was. So what was that? January 20th. So let's go to January 20th on Bitcoin. Bitcoin had already hit 40K, right? And its previous all-time high was 20K. So Bitcoin already pulled a 2x on top of its previous all-time high before Ethereum made an all-time high last cycle, right? And then after Ethereum made an all-time high last cycle, it went on to do nearly 4x its previous all-time high, right? So ETH season does come. It's just late. It's late in the cycle that it happens, right? So we should not be surprised. This is normal, very normal activities for Ethereum. And we should not be worried or concerned or whatever. This is normal. Ethereum underperforms heavily, and then it outperforms heavily, and then it underperforms heavily until the end of the next cycle. That's just how this stuff works. So I'm not worried about ETH. Ethereum is going to be an insane play, especially later in the cycle, because in the past, I think it's 16 days now, Ethereum has added, what was it? It's like $11 billion to its stablecoin market cap. And now there's a lot of projects out there. There's a lot of VC scams that are fresh and popular. Let's look. What's Sui at? Sui is at 10.8 billion market cap. And right now we hear a lot of noise about Sui on the timeline, right? Everyone's talking about how Sui is so great and it's going to flip both Solana and Ethereum. But Ethereum in the past 16 days added the entirety of Sui's market cap, which is a high supply controlled VC scam, as all blockchains are. So it's not even, it's like much more than what its actual market cap is. But it added its entire market cap in stable coins, not even just the actual market cap, but in stable coins alone in 16 days, right? So there's a ton of money moving to Ethereum. There's a ton of money sitting on Ethereum. It's at $95 billion right now in stable coins just sitting on Ethereum. And most of the reason that I like Ethereum so much is because most of the stable coins on Ethereum are algorithmically controlled. And I'll tell you what I mean by that. Stuff like Pepe, right? I can never forget in July when there was some flash nuke on Ethereum, like some massive scam wick, while it was pumping, right? This was end of July or maybe end of June. So Ethereum was pumping. and there was just a random scam wick out of nowhere on Ethereum. And immediately you saw the same exact scam wick on Pepe, right? Because there are algorithm traders on Ethereum that control insane amounts of Ethereum and stables, and they bid on stuff like Pepe, right? And so Ethereum pumps, and Pepe pumps, and Mog pumps, and all the Ethereum large caps pump. And that's because the stable coins are controlled by algorithms. And it's not just the large caps on Ethereum, but it's also other altcoins as well, right? Those stable coins, it's like all of crypto's stable coins that are active. They flow into other chains too. And you'll notice that the on chain ecosystem for pretty much everything does significantly better when it's in a good spot. And that's why I like it. Most of the money, like the deep pockets, are on it. And I'm not talking about the $10 million whales. I'm talking about the $1 billion whales. These are the guys that make everything go absolutely crazy come peak bull market. And we already saw what happened when it hit, what was it, 3,300, 3,400? Let me pull up my ETH chart. A few days ago, it hit, yeah, 3,400. And Pepe went to 10 billion, right? And Mog hit a billion, and so on, right? So when Ethereum pumps, these algos, they go risk on, and then they pump everything. And that's why I like being on Ethereum. And I'm happy underperforming the market, being on a chain that underperforms the market. My tokens aren't underperforming the market. There we go. I'm happy being on a chain that underperforms the market. Seeing ETH Solana and ETH Bitcoin go down, that's fine with me. I don't really care because I'm not positioned for the now. I'm not selling my ETH coins now. You can't get me to sell my Wolf and my Bobo and my Stonks and Yes Chad for now. I'm selling that when the peak bull market comes. ETH over Bitcoin has been in like a 2 to 3 month uptrend, and everything is basically on the moon because Ethereum is in full risk on mode. It's at $8,000 to $12,000. That's my hope. $12,000 is like my upper range. $8,000 is my lower range for ETH. I don't know. Some people don't think that's realistic, but I think that's because you've drank this Ethereum is bad Kool-Aid that everyone drinks every cycle. ETH going to be at like 8 to 12K in my opinion, is going to be much higher than it is. I don't think it's going to ever go to all-time highs, obviously. Again, like I said earlier, the only guarantee that we have in crypto is that everything will go to zero against Bitcoin given time. So I don't think ETH BTC will see new highs or even higher than last cycle, but ETH BTC will have been in at least a 2 month uptrend before we have the peak euphoria of the bull market. And that's when I plan on selling. So I'm completely fine with being on a chain that underperforms now because I'm positioned not for the little tiny moves that happen every day on Solana. I'm positioned for the really massive moves that are going to happen towards the end of the cycle on Ethereum. And it's not to be said that you can't make money on Ethereum in the meantime. I started my portfolio with $1,000 and I've grown it to 7 figures basically only on Ethereum, right? Ethereum is a fantastic place to make money if you have patience for it, because most of the things on Ethereum are slow cooks because they just move slower. There's less on chain volume, and that's okay. So there's plenty of money to be made on Ethereum. But yeah, we're not positioned for the short term. That's why I'm unbothered by ETH BTC being in a perpetual downtrend. But that's all for like market updates right now. Let's look at the Stonks chart. For anyone who's new, we always do a market update first, then we do like a Stonks chart update, and then we talk for a little bit about a different topic every week. Like last week, it was trading tips and some other random bits and pieces. And today it's going to be about buying and selling respectfully to get the most out of your money. And a lot of that's going to be about V3 pools. We'll also talk about Jupiter and like the DCA bot. A lot of helpful stuff, right? Ways that I myself don't ever really get screwed over by price impact or slippage, unless I want to, right? Unless I really want to pump a chart. So let me pull up the Stonks chart. Here we go. So the Stonks chart looks really good. Right now we're sitting at 14.5 million. We had a crazy wick, right? Because a whale decided to sell over $100,000 worth of stonks today. And they did it in the span of an hour. And we were already at local lows. We were around like 13 mil, 14 mil when this happened. So we dropped all the way down to 11 mil. Yep, 11 mil. But the community basically absorbed everything. And I'll pin my chart that I posted earlier to the room so everyone can see what I'm looking at. There we go. I just pinned it to the room. But yeah, we completely absorbed all of that pressure and we closed the daily green. So that looks like a local low to me. A massive wick to the downside, especially a green wick, almost always marks local bottoms. So I'm super pleased with that. I think the stonks chart looks really good here. And I'm adding more. I can't remember the last time that I bought less than one onto the chart in a day. I'm always buying more stonks. Sometimes I post about it, but usually I only do that when it's 5, 6, 7 ETH, just because I don't want to fill my timeline up. I feel like that'd get annoying after a while. So the chart looks good. If we pull up any of our indicators, let me look at MACD real quickly. MACD works really well on stonks. Okay, cool. If you're on your daily chart for stonks and you look at the MACD, right? We had a bearish cross a few days ago. This was on the 15th that we had that. Today is the 19th now. And today we had a shift in momentum. So if you look on the Stonks chart, and not specifically whenever we have a bullish cross, but if you look before that and you see the green candles and the red candles that measure momentum, whether it's to the downside or the upside, if the candles are solid colors, like they're a solid red or a solid green, that shows growing momentum to either the downside or the upside. And then if it's a light green or a light red, that's declining volume to the upside or the downside. So we just had our first declining momentum day. And if you line up, whenever we started to have declining momentum to the downside with like on November 5th or October 28th or on October 4th, that's either always the first or the second day after a local bottom. So that tells me that stonks just put in a local low and I expect to move up from here. That's been very consistent in the past, and I don't see why it wouldn't be consistent now. So, like right now, we've currently got a dark red candle for the MACD on this new candle, but this new daily candle has only been up for 3 hours. So we just disregard whatever is currently happening until it's closed, because nothing matters until the candle's closed. And let's look at RSI. Okay. It looks like we just closed yesterday or today's candle at 50.3 RSI. So that's still an uptrend territory. Everything screams bullish to me about this chart. We didn't lose our 0.618 fib at 13 mil. We held that with strength. There was so much buy pressure below that. Yesterday, we wicked down to the 13 mil mark and then we closed green as well. So that's 2 days in a row now. It reminds me of late October. I think that's October 27th and 28th, right? We wicked down to 13 mil and we closed green on the 27th. And then we wicked down deep below 13 mil on the 28th. And then we closed green, right? So it reminds me a lot of the same. And the MACD also looks very similar to that instance. Everything just lines up. Everything looks really good here. And yeah, another thing as well, a fellow project. Again, I'm not the lead for Yes Chad. I'm a big holder and I've been helping on the team as an advisor and I helped a lot, especially with the launch because I actually have experience due to stonks. Again, I'm not the lead, but I am pretty heavily involved. The Yes Chad team actually decided to make a strategic investment into stonks with $20,000 and they bought onto the stonks chart as a repayment for all the support that our community has showed them. So that's pretty cool as well. And that that project's treasury is loaded. It's a 7-figure treasury. It's only, what is it right now? It's a 9 mil market cap. They're just now partnering with a new market maker, which I can't really leak. Some people know, some people don't. I can't really leak it yet. Follow the YesChat official Twitter and you'll see an announcement soon. So like they're showing support to us, which is good. You can expect continued support. So they're happy to help a lot. And yeah, I think that's it as far as the Stonks chart goes. If you guys have any questions about the Stonks chart or the markets, feel free to comment them below. I see Easy down there. Easy's actually the person who I learned about V3 pools from. Easy, do you remember Bird Dog on ETH? I was the voice behind that. So you talked about V3 pools a lot when I was still pretty fresh in the game. That's something that we're going to be talking about tonight. If you want to come on up, you're more than welcome to. Anyone can come on up. We're nearing the open mic part of the weekly update. So again, guys, if you have any questions, anything that you'd specifically like us to talk about, like it doesn't have to be about buying and selling respectfully. It can be about literally anything. Just comment them in the purple pill, bottom right corner, and you'll see. I'm looking in there and I don't see any questions yet. I just show a lot of people pinging Saucy, which is great. Maybe Saucy will show up eventually. So yeah, you guys are welcome to come on up stage. I'll be starting to talk about buying and selling respectfully. So I'll give like an overview of what I personally do, like my strategy. For the Stonks project, we specifically added the wormhole for this because with the wormhole, it allows whales to sell respectfully on the chart without really having any kind of impact. And I did some extensive testing with this. I was able to actually, and I'll preface this by saying everything that was sold was bought back onto the chart, and it was actually bought back onto the Ethereum chart. But I was able to sell 1% of the stonk supply on the wormhole using a DCA bot without having, the only impact on the price was like 2 million market cap ish, right? And 1% at the time was worth like 150 grand. And I did that over the course of a day with a price impact of less than 10% using the DCA bot. And so it's like super powerful being able to use this. And then I bridged all of the Solana that I got from it onto Ethereum and I just fired it onto the chart. And that's what helped the reversal a few weeks back. But I say that to say like the DCA bot on wormholes it's super, super powerful. And the way to use that is through Jupiter. Like if you use Phantom Wallet for your Solana tokens, you should be using Phantom for your Solana stuff. I can't think of anything that's better. But if you use Phantom, go into your browser and you'll see Jupiter as the first thing that pops up. And yep, it's just right there. And if you go into Jupiter, you can, on the swap side, like you don't go straight to DCA, but on the swap side, you just pick out the pair that you want to DCA into or out of. This works on buying and selling with minimal price impact, right? So you could buy a significant amount of stonks without pushing the price up too much if you want to just use the DCA bot, or if you want to sell without impacting price too much, you can just use the DCA bot on Jupiter. So you just pick the pair that you want to DCA into or out of, right? The default is Solana and USDC. Then you go over to DCA and then you just choose how much you want to allocate and then you pick the interval, right? So let's say you want to buy $10,000 worth of stonks and you can include a price range in it for one. If you want, you can do only within, what's the current price of stonks? What's the price? It's 0.000034. So you could do like between a price range of 3.2 and 3.6, and then every 5 minutes, a $1,000 buy goes off. And so that would mean you'd have to have 10 orders because you're trying to buy $10,000 worth. So 10 orders every 5 minutes and within that price range. And then you get to buy $10,000 worth without having any price impact, right? And that works for selling as well. And that works for literally anything on Solana. Jupiter is probably the greatest crypto DApp out there. I don't really think there's anything better. Uniswap is pretty good, but Jupiter is just insane. It's super insane. I highly recommend everyone learns how to use it and masters that. And another thing for Solana is using Radium, and specifically using that for liquidity pools, right? If you go into Radium, and let's say you want to phase out of something, right? So you could go into Radium and you can create a concentrated liquidity pool. I'm not super well versed in concentrated liquidity pools on Solana. I just know a lot about them on Ethereum. V3 pools are a lot easier to manage, in my opinion, than Solana concentrated liquidity pools because it's just, I don't know, the abbreviations mix me up on Solana. There's just so many of them and they're all like slightly different. So I prefer using Ethereum for liquidity pools, especially because better than liquidity pools is the Jupiter DCA bot. So I don't really know why you'd use liquidity pools when you can use Jupiter on Solana. But on Ethereum, something that I use a lot, and this is something that I used to do for Wolf, and I made a good amount of money off of it, and I did this for Stonks as well, is you can provide liquidity. So if you go into your Uniswap, like you have to go into your wallet browser, and then you go to Uniswap, right? And if you use Jupiter, you would need to click more sites and then switch it from Solana to Ethereum. Like it by default, it shows Solana websites, but you can switch it to Ethereum. And then you go onto Uniswap, you hit the three bars in the top left, and it will offer a bunch of different options like limit orders, swap, and pools. And then you hit pools, select the V3, then you go to new pools, and then you can create a V3 pool with any token that you'd like. So what I did is I did for Wolf. I don't think the Wolf pool is even active right now. I have one of them set to start at 200 mil market cap or the equivalent of that in price. It may be a little bit different because you have to put it in the ETH value. But basically, the way that I have it set up is that once Wolf gets to roughly 200 mil market cap, it takes about 10% of my bag and it puts it in a V3 pool. And then once Wolf is at, I think it's like 400 million market cap, that V3 pool will have completed its range, right? So it's set between 200 mil and 400 mil. And at 200 mil, it's only in Wolf, right? And at 400 mil, it's only in Ethereum, right? The reason that I do that instead of selling and taking partial profits is because it's beneficial to the project, right? I'm not selling. And in fact, I'm providing liquidity, which decreases people's slippage. So I'm providing a valuable service to the project. I'm providing liquidity. And the reason that it's not bad, even if you put like a 1% fee tier, is because Uniswap always routes through the cheapest transaction or the cheapest path. Even if you have a 1% fee on the liquidity pool, which you do collect, and it's fantastic, it's just free money, right? Most people have all their money sitting in a wallet. You can actually put that money to use and make yourself a couple $1,000s a day off of something that has good volume, assuming you've got a decent bag of it, of course, right? You can't make a couple $1,000s a day off of a $5,000 liquidity pool because you're not going to be able to handle much volume. But if you make the V3 pool, it's beneficial for the project. You're providing liquidity and you save people on slippage, right? If someone buys $10,000 worth of Wolf, it'll probably route maybe 20 to 30% of that through my V3 pool and 70 to 80% of it through the V2 pool. So it splits it up so that there's no slippage. And it's just really good for them and it's good for you, right? Because you're also getting volume. Since it's splitting up that order, you've got a $10,000 buy, it splits it up. Let's say you get 30% of that, so that's $3,000 routing to your pool, and you've got a 1% fee tier. So out of that $3,000 buy, you're making, what is that, $330? Yeah, you're making 30 bucks, right? Just off of that one buy. So you make passive money and also you're saving other people money. It's just all around better, right? And another benefit of it is that there's no price impact, right? So my liquidity pool is set to go between 200 and 400 mil. And so at that range, it's constantly, price is still increasing as my liquidity pool is active. And it's important, by the way, this is just a side note, it's important not to have the liquidity pool set up in a super tight range, like 200 to 210 mil, because then it's no longer beneficial. It's like a sell wall at that point. It's basically like a limit order because they've got to chew through all of those tokens before they can resume. So make sure to have a wide range so it's actually beneficial for the project and you don't force like a local rejection. But between that range of 200 to 400 mil, there is no selling, there's no negative price action off of that liquidity pool. Price is still increasing through it. So not only am I not getting any price impact, but I'm getting like positive price impact, right? So price is increasing as I'm selling, and I'm not doing a disservice to the project, but I'm actually helping the project by providing liquidity and decreasing people's slippage on transactions. Overall, it's best for everybody. You're making more money, like with a pool of 200 to 400 mil, I'm getting an average sell of 300 mil, right? So everything that I put in that tokens altogether, it's going to be as if I sold it all at 300 mil. That's an entire 50% higher than if I just had a limit order set at 200 mil where the pool starts. So I'm making more money. There's a positive price impact instead of negative price impact. And I'm helping the project out. I'm providing liquidity and I'm making passive income off of the fees. There's no reason not to use it. So it's just extremely helpful. And for stonks, when I did stonks, I did a V3 pool for it a while back. Um, and I don't know if Easy remembers this, but he very generously offered to help without us paying anything. We reached out because Bought the Block and I knew him from Bird Dog days. This was very early in the stonks project. We actually reached out and asked if he could help with us, and he said, yeah, sure, no problem, without making us pay for anything. So this was before I knew anything about liquidity pools. We couldn't down a time between me and Bought the Block, so I just ended up teaching it myself. But the way that I had it set up is I was providing about $200,000 in liquidity in the V3 pool with I think it was like a $400,000 liquidity pool at the time. So I was getting around 20% of all the volume in stonks. And out of that, if we did $1 million in volume, which we did one day when the liquidity pool was still alive, I took it down because I decided that I liked the increased volatility and it's not that bad at a higher market cap. It's not good at a low market cap. Like when you're at 2 mil market cap, you don't want only like a $20,000 sell to send you to sub 1 mil. That's not good. That's stressful. So V3 pool is great. But like when you're high up, it doesn't really matter. But like on $1 million volume day, when I was getting 20% of the volume, like I would have $200,000 come through my liquidity pool and I would get 1% out of that. So I'd get $2,000 in just passive income for letting people use my money for slippage, right? So people are getting less slippage. It's fantastic. We're just having a more structured slow grind up to the upside, which is fantastic. It's super bullish. But at the same time, I made $2,000 that day in passive income, and half of it was in Ethereum and half of it's in stonks, right? Because if someone sells like 100 million stonks, then I get 1 million out of the stonks because I had a 1% fee tier. And if someone buys one ETH, then I get 0.01 ETH because it's a buy. So I got free money basically for letting people use my money. And it was relatively low volume at the time. So it was between like $500,000 and $200,000 volume on average. There was just only one really good day. But if you have that set up on something Wolf or Bobo or Hoppy or Andy, right? Any of your more mid to high cap memes, and you've got like 1% of the supply, right? There's no reason not to, in my opinion. If you have a really broad range setup and you have high conviction in it, so you're not afraid of impermanent loss, and that is something that I'll talk about in a second, and there's no reason not to, because you can be getting like a couple $1,000s in volume per day. And that's how I made a lot of my money through the range back in July, because market go down or market go up, there's still volume. I don't care if it's volume or if it's volume, I'm still making money. That's another reason that I think V3 pools are super important to learn because they don't care about market conditions. As long as there's volume, you stay printing. So it's a consistent form of income and it's very beneficial for all parties involved, right? You're not screwing anybody over by selling and hurting a chart. You're helping the charts that you're providing liquidity for, unless it's a super high liquidity token like Bobo, you don't want to provide a ton of liquidity for Bobo because it's already got a ton of liquidity. It doesn't need more. That would be almost harmful. But stuff like Andy, very low liquidity on Andy. So you could do that and it's beneficial towards the project. Same with Wolf, same with Stonks. It's overall beneficial for everybody. You make a lot of money consistently in an up market or a down market. And it's just really good. And it's a good way to phase out of things too. Like when I did the Stonks pool, I put up half in Stonks and half in Ethereum. So when it moved up, I curved it a little bit so that it was all in Stonks at 4 mil market cap, and that actually saved us a few months ago. But like you can set it up so that it's 50-50 and it acts very similarly to a V2 pool. If you do a 50-50 pool, you're for the most part immune to impermanent loss. Like you're not going to get all of your Ethereum liquidated. But what could happen, I just want to say, if you put up 40% Ethereum and 60% Wolf, for example, and Wolf drops to whatever is your minimum point in the range, right? Let's say, like with my liquidity pool for Wolf that hasn't activated yet, right? It's between 200 and 400 mil, right? So let's say Wolf gets up to 300 mil, right? And now all of a sudden, I've got, let's just throw random numbers out there. Let's say I've got $100,000 in Wolf and $100,000 in Ethereum, right? And because it's in the mid range, it's going to be basically a 50-50. Now I could pull that liquidity pool and I could take my profits. I could take my $100,000 and my 100,000 in ETH, or I could just leave it in, right? And you can take it out at any point in in time. It doesn't need to be at the mid range. You can always take out your liquidity pool. It's your liquidity. But let's say Wolf dropped and it dropped down to 200 mil again. All of a sudden, I don't have $100,000 in Ethereum anymore. All of that has been used to absorb sell pressure, and now all of that $100,000 in ETH is back in Wolf. So that's what we call impermanent loss. So it's saying that you haven't really banked a loss because you have something out of it, but you don't have what you had just beforehand with that Ethereum. I see Easy has his hands up. What's up, man?
Yes, so great conversation here, man. This is really the alpha. I love what you're talking about with the impermanent loss. Impermanent loss can be your friend because if you want to use Bitcoin for an example, you want Bitcoin, it's 94,000, right? But you can put one-sided liquidity by whatever the coin is. And once it goes through your liquidity pool, now you have what's called impermanent loss. And impermanent loss is your friend in the bear market if you want to accumulate a coin, because now you've accumulated the coin at a lower price and dollar cost average without paying gas fees. I put some one-sided liquidity pools in, and I'm like, come on, give me the impermanent loss. That means you've took my ETH, I've got your coins, but I'm looking in the future what these coins are going to be worth. That's when impermanent loss is my friend. And another thing that you're talking about, Guardian, is when you're putting in these liquidity pools, a lot of people don't understand that you're able to put these pools in out of range. And you can start a pool today out of range. For instance, just what he's talking about, but let's just take stonks for an example. Let's just say you're a holder of a stonks, you believe in stonks, and you're a holder of Ethereum, right? It's still your Ethereum. You can put an order in to buy stonks at a 30% discount. So you can put that in there. All you're doing is paying the $8 gas fee to put it there or whatever. And you're basically, your ETH is still in your wallet. You have control of it. It's no different than it's just sitting in your wallet, not doing nothing. But then let's say some fat fingers one day and hits the button. Guess what? You are now the owner of stonks because you believe in that coin at a 30% discount to where it's trading. Now, if people buy that coin back up, then you're left with ETH and you get the fees and everything, which is okay.
Oh no, he rugged.
Yeah, it looks like it.
All right, I'm inviting him back up.
Yo, what's up?
What's
Hey,
up?
Jules. Sorry, Easy. I don't know what happened.
This
That's
super
it.
energy guy that comes in.
So
What's up, fam? We're
fucking-
going to the moon. Anyway,
Oh my god, we're going to the goddamn moon.
yo, I just wanted to say, man, I just came from a live stream with hundreds of people on it, at someone well known in the space interviewing normies, asking them why on Moonshot they bought things, and they said because it's green. He replied, "Oh my gosh, that's the best alpha." Was being dead ass serious. The best alpha in crypto is you buy when it's green. So I just have to say, I don't know what planet people live on, but for me, holding has been a really excellent way to make money this cycle. It's made more money for me than day trading. So maybe I have a skill issue, but I've been holding stonks for a while. I fucking believe in the community, in the asset in and of itself. This whole, I'm just going to be quick because I have to bounce off if that's okay, Guardian. Is
Yeah,
that
you're
cool?
good.
Took over. My bad. Just the TradFi narrative makes a lot of sense this cycle. And so I just wanted to say hello. I don't want to take over. I do legit have to pop off stage, and I'm gonna come back and listen to this because I want to figure out these V3 pools and stuff. But just wanted to say hello.
Sounds good. Thanks for coming, man. I think I don't know what happened with Easy and Saucy. I think they both rug now. But basically, yes, what Easy was talking about, limit orders are your friend, V3 pools are your friend, and setting them up ahead of time and preparing is the best way to turn profit in this thing, in this game. You want to prepare, right? Some people had limit orders. I saw a lot of limit orders get triggered on today's little fiasco with the whale dumping. When that happened, there were a lot of limit orders that got triggered, and people got to buy songs at 11, 12 mil market cap, and they weren't even by their phones. And there's no cost to doing that. Easy said it's like an $8 gas fee. Like, there's no reason not to. I always have limit orders set, and I mostly use them on Solana, but you can also do that on Ethereum. You just have to use the Uniswap browser. You can't use the app, you have to use the browser inside of the wallets, and you can set limit orders, and it's great. You can also use CowSwap. I don't really like CowSwap. I just use Uniswap. I just think it's better. And to people who say, "Oh, there's no MEV protection," just set your slippage to 0.1% and you won't get MEV'd. Or you could also, like on the actual app, not the browser. I don't know why they don't have this on the browser, but they do have it on the app. But on the app, there is actually a MEV protection option. Uniswap is good. I don't really like CowSwap. But yes, limit orders are your friend. V3 pools are your friend. Those are two of the best ways to phase in and phase out respectfully and optimally in crypto. I think that's all that I wanted to talk about as far as buying and selling responsibly and respectfully and getting the most out of your money. Saucy, Molon, if either of you guys have anything that you'd like to add, you're more than welcome to.
I appreciate the leader of a project speaking about selling. You don't hear that from most devs, most leaders. I would just like to say this. If you need to sell, or if that's your style, I understand it. I could have sold everything if I didn't believe at 29 mil. I just wanted to share my perspective that I believe Stonks is going a whole lot higher. And it's been difficult for me to not buy more because I do believe there's a chance that it goes lower, and I'm trying to exercise discipline. And that happened today. And I probably should have bought more. My point is to say that I have a high degree of conviction in this project and the leadership and community, what Jules had said. And so for me, this is a longer term play because I sold too early and the bull run is just now starting. And had I not have sold, I would have been up I'd be up 2x on top of the multiple that I already got when I started buying at 4 and 6 and 8 before it rocketed. So if you can hold on to a high conviction asset for longer than 30 days or 60 or 120, 180 days, I'm more interested in how do you responsibly sell when I see 100 million. And so just remember that when you're selling, the opportunity cost of selling is that it continues to go up. And Guardian, I really appreciate you having a level head and being just real and having the conversation about selling, because it's not a conversation a lot of people have because they don't want anybody selling. But had I not have sold on that 2x pump from 4.5 to 8 or 9, I would be up a whole lot more money. And it's one of those things. And I understand how people trade, but what I'm looking at right now with Stonks is every month, if I'm given lower prices, I'm going to keep buying because I believe that 50, 100 million is the next level. And just remember that when you sell something, you might not get a better entry. And it's very difficult to sell the top and buy the bottom. And y'all are looking at, I think, a really great digital asset here. And I think we all believe we're going a whole lot higher, and maybe that would be a better time to consider selling. That's all.
100%. 100%. This is a bull market, and everything of quality is going to go up, right? That means like basically anything with a real team behind it. It's all going to go up. Um, and yeah, so like we really need to be careful about what we sell because more often than not, we're not going to get the entries back. And so that's why I think it's extremely important to have a long-term storage wallet or a cold storage wallet that you just don't touch. And that's where I keep most of my high conviction plays, right? So my stonks, a lot of my stonks is in there. I've got some Yes Chat in there. I've got some Ponky in there, some Bobo, some Wolf, right? And I don't sell those. I don't even touch that wallet. I don't really look at it, and that's how I help myself, like prevent myself from over rotating. And that is like a really big issue that a lot of people have, over rotating, taking profits too soon to chase new shiny objects. And it always looks good in the short term, right? But you can never really believe that voice in your head that says, you can sell a little bit of your conviction play, whatever it is. Let's say Bobo. Like you can sell a little bit of your Bobo and then do a quick flip and then you can buy back more Bobo, right? That voice is a lie. And yeah, so it's just better to have a long-term wallet and really identify those winners super early on. Like I think Stonks is a pretty easy one to identify because it's just such a well-known meme, but other things as well, like Bobo and Wolf, right? Like those were two things that I got into relatively early, and I've been riding those. I bought a ton of Bobo and I bought a ton of Wolf, like around 20 mil for Wolf and 25 mil for Bobo. Uh, and I actually caught Bobo because of limit orders. Limit orders is actually how I got my Bobo bag, but I don't touch those. Yeah, 100%. Saucy, I'll let you jump in first, and then we'll let Easy wrap up whatever he was talking about earlier. I said that you could go after Molan. How's it going, Saucy?
We're just letting scammers on the space now.
Bro. Saucy.
You're just letting people that pull liquidity on spaces and no.
All right. Doesn't matter who it is. Saucy, anybody else, you guys can take your drama elsewhere. I don't really care. Be dramatic somewhere else. I love you, Saucy, but that's not the place for it.
As Board says, keep it a buck. We're here to build.
Yeah, I don't really care what beef anybody has with anybody else. This is not the place for it. This is a Stonks weekly update space, right? This is going on Spotify and YouTube. No one on Spotify and YouTube cares about crypto Twitter drama. Easy.
Hey, I was considering about shaving I've never done like the full on bald thing. And I just found yesterday some of those glasses, they don't say stonks go up, but just throwing that out there.
Oh, shoot.
I got a suit down here, dude. Stonks on the beach.
That's awesome. Easy. I'll let you wrap up what you were saying, and then I'll check the comment section and see if there's any questions from anybody in the audience, and then we'll probably wrap up the space.
Yeah, man. So I just maybe just fast forward because I'm not for sure where I stopped talking at. I was just talking and then realized nobody was here. But anyway, but I'll just fast forward a little bit just to the topic that you were just talking about. And this was a hard thing for me to really understand because I felt like I knew what I was doing and everything. And you talked about having a conviction play, owning it, and thinking you're going to sell it, some of it, and you're going to buy it back cheaper because it's your conviction play, right? And what you're trying to, and this is my experience. It was Bitcoin, right? So it was like my conviction play. It's like I didn't really want to sell it. I didn't want to take profit, but I wanted more of it, right? And, I thought I knew better than everyone else when they said, don't get rid of your Bitcoin. Don't get rid of, like, I'll tell you another coin I did it with, Bobo. Like, it's the worst trades I've ever made, right? And I look back on it. Now, I still hold a good amount, right? But I look back on it and I say, I would have been better off over that period. So for a short window, it looked like I was gaining, but and I think these happen, like they don't happen with coins that I'm trading with no conviction because a win's a win, right? But when it's a conviction play and you're still in it 3 months later, and then you look back and said, wow, had I not sold that coin and tried to buy it back, I would actually have more of it today. And I know I can only just talk about myself, and I thought I knew how to do it better than everyone. And man, you're so right. I think that's where, when they say there was this thing years ago, and it's where it would come out was buy the dip or hodl. And that is so true in a bull market. In a bull market. The buy the dip mentality in a bull market will pay off. It's better than trading. So you're just very patient. You see the opportunity today. Like today, I bought more stonks today, right? Because I'm just very patient. I seen an opportunity. Like that was an undervalued opportunity. And I didn't buy a lot. I think I bought 0.7 or something like that, 0.7 of an ETH worth, right? But I've seen what this thing can do, and I see how the liquidity pools are set up. Like this thing can easily shoot up to 400 million the same way it shot up to 40 million. Is the way the liquidity pools are set up and everything. Like the price impact is really good. Like it's a great meme. So it's like people see this meme, like they see Pepe meme, or they see, like, it's stonks. I mean, we all know about stonks from the pandemic, man. Like everybody was getting Robinhood accounts and they were buying stonks, and they were, that was the meme word to buy stocks. And so I'll just end that there. But you're so right on the thinking you're going to out-trade. So on your conviction plays, it's really hard to do. And here's why. Because they're your conviction plays. So 6 months after you make that trade, because you're still in it, because it's your conviction, that's when you realize, oh, wow, I would have just been better off holding and just buying the dip. So I've learned from that, and that's just what I do. Now, if it's not a conviction play, I'll trade it, right? But if it's a conviction play, I just buy the dips and hold. That's it.
100%. I completely agree. And it's always like a slippery slope mentality too. If you're willing to sell your conviction play to chase something and try and do a quick flip, like these quick flips, they're never reliable. So what if you lose money? Oh, you're probably going to sell a little bit more of your conviction play. It's okay. I lost $500. Now I need to sell another $500 to make a 2x, and then I've got my original amount left. And then in the same amount of time, your conviction play moons, and then you're just left with $1,000 left, or rather $2,000 left, because your conviction play did a 2x. and then you just get screwed over. So 100%, that's a really good point. But with that, everybody, I think we're going to end the Stonks Weekly Update. Everybody, thank you for coming. This will be uploaded to YouTube and Spotify per usual, and we will have another
Guardian, if
one
you got that
same time
Wales
next
number,
week.
if you could send them a thank you from me for a third ETH worth at $11 million market cap.
Dude, I'm super grateful that we got that dip. Super free. But once again, guys, thanks for coming, and I'll see you all next week.